think it's pretty convenient, and oftentimes we see the pundits on both sides of the aisle and in the media and in asset management space kind of taking advantage of an opportunity like this to seize upon it for their own purposes. And so this was a convenient headline that many, like Senator Rubio, jumped on to point out the lack of predictability around companies that are listed on the U.S. exchanges. The reality is that the actions taken by the Chinese government with regard to Didi and some of those other named entities are in an effort to better regulate them, to protect privacy, and to root out some of the very items that American regulators had complained about for years. And so obviously the actions taken by the Chinese state over the last few days didn't happen overnight. They were actually probably years in the making and coincided with the 100th anniversary of the CPC. Those actions are taken, frankly, and through the statements, if you translate them and read them, in an effort to better regulate financial markets, to better provide for transparency to businesses, which they didn't feel those companies were meeting. They felt that data privacy wasn't being protected to the level that they are now raising it to. And so as a result, those actions were taken.
But there have been issues in the past. By the way, Ben, there have been issues around the world. There's been fraudulent companies in the United States. There's been fraudulent companies in Europe. This is not a country-specific problem. This is probably a greed-specific problem. But how much of what's happening right now with a Didi or some others comes back to Luckin Coffee? Okay, the scam company there that grew, they're adding hundreds of stores or whatever a week. Everybody was rah-rahing them. They're the new Starbucks. Suddenly you realize everything was a house of cards. Does this come back to kind of the embarrassment for really the nation over Luckin?
I think it certainly was one of the drivers. I think there was a loss of face there, and I think that there's an intent to avoid future events like Luckin. And so as a result, the regulator is going to be overly cautious and work, as I said, to root out equity market fraud. If you look at the Chinese regulator's statement, the majority of the points were around that issue. Data privacy and cross-border data flows were very much secondary to that. But that is the root of this. And again, these are preventative measures to avoid the exact types of events that Senator Rubio was fearing from occurring again in the future.
So how do you and your team figure this out? Obviously, no investing is perfect. My venture capital friends and contacts, they'll invest in 10 companies. You hope that one, maybe two if you're lucky, hit it big. What are some of the ways that you guys now filter out these names? How do you make sure, because there is some limited disclosure for some of these companies, how do you figure out you're getting what you think you're getting?
So I think first we work very hard to avoid the regulatory gray zone. So certainly over the last couple of years, we intentionally avoided the education space, which is one where we still believe the policy has not been fully fomented. And so as a result, unclear where the wind will blow there. We instead favor sectors where there is more clarity, typically where it's not always consumer facing and where there's a greater degree of privacy and protection and the businesses operate on a B2B basis. And certainly then we encourage our entrepreneurs to engage in regular dialogue with the regulators, because as I said, these things don't happen overnight. These winds were blowing from long ago. And so if those dialogues are happening on a frequent basis, they can get a sense of where they need to take actions. And so Didi specifically is a company that flaunted regulations and didn't make course corrections when they were advised to do so by the Chinese government. Other companies in our portfolio were much quicker to react and as a result didn't see similar regulatory interference.
Shepard Smith here. Thanks for watching CNBC on YouTube.